How Trump's tariffs might disrupt the Indian stock arena. Hey everyone, welcome back to the channel. I'm so glad you're here because today we will be discussing Trump's tariffs and how they may disrupt the Indian stock arena. Are you ready to navigate the potential storm? We're diving deep into how potential Trump tariffs could ripple through the Indian stock market, impacting your investments and the broader economy. Buckle up, because this could get bumpy. Trump's potential return to the White House brings with it the specter of renewed tariffs. These aren't just abstract numbers, they're taxes on imported goods, potentially raising costs for Indian businesses and consumers. This could significantly alter the landscape for Indian companies reliant on exports to the US. The core issue is that tariffs increase the price of Indian goods in the US market. This makes them less competitive against domestic products or goods from countries without tariffs. Consequently, Indian exporters might see a decrease in demand, impacting their revenue and profitability. Certain sectors are particularly vulnerable. The IT sector, a major contributor to India's GDP, relies heavily on US clients. Increased tariffs could make Indian IT services less attractive, potentially leading to project cancellations or renegotiations. The pharmaceutical industry is another key area of concern. India is a major supplier of generic drugs to the US. Tariffs could raise the cost of these essential medicines, impacting both Indian manufacturers and American consumers. Textiles and apparel are also at risk. These sectors are labor-intensive and rely on competitive pricing. Tariffs could erode their advantage, leading to job losses and reduced export earnings. Tariffs can also indirectly impact the Indian rupee. Reduced export earnings could put downward pressure on the currency, making imports more expensive and potentially fueling inflation. The Reserve Bank of India, RBI, might intervene to stabilize the rupee using its forex reserves. However, prolonged intervention can deplete these reserves, creating further economic challenges. So, what can investors do? Diversification is key. Don't put all your eggs in one basket, especially if that basket is heavily reliant on US exports. Consider shifting some investments to sectors less vulnerable to tariffs, such as domestic consumption-driven industries. Thorough research is crucial. Understand which companies are most exposed to US tariffs and assess their ability to adapt. Look for companies with strong balance sheets and diversified markets. Consider hedging strategies. Using financial instruments to protect your portfolio against currency fluctuations and market volatility can be a smart move in uncertain times. Consult with a financial advisor to determine the best approach for your individual circumstances. The potential for renewed Trump tariffs presents a significant challenge to the Indian stock market. Understanding the risks and adapting your investment strategy is crucial for navigating this uncertainty. Don't wait until the storm hits. Take action now. Research your portfolio's exposure to US tariffs. Consult with a financial advisor to discuss diversification and hedging strategies. Subscribe to our channel for more in-depth market analysis and investment insights. Share this video with your fellow investors to help them prepare for potential market disruptions. Let's navigate this together.